Oh, how you doing, friends? It is Tuesday, July 1st, 2025, and this is the 0DTE Tail Risk Morning Market Analysis. This week is a shortened trading week by a lot. It's only about 3.5 days of trading because of the July 4th holiday, obviously. It preempts what's going to happen on July 9th, which I believe is the limit to, or the end of the pause of the tariffs, the 90-day pause. Not a lot of people are talking about that, but I think that the market will soon realize, that the 90 days was an actual thing. Today we have a bunch of things on the economic calendar, but the thing that preempts everything is Powell. And so there's more to today's Powell watch than just interest rate guidance. He's coming on at 9:30, just as the market opens, so that'll be interesting. Hi, Dougie. How you doing? But the rumor mills are swirling that Trump, this isn't really a rumor, everyone knows it, that he's deeply dissatisfied with Powell's stance on rates. But he could announce his Fed chair replacement months ahead of schedule. Now, this is a Trumpian move designed to undermine Powell's influence without breaching protocol. Of course, everyone's expecting him to fire him, but Trump knows that he can't really fire him because then Congress will get all up in a bunch because it's supposed to be their responsibility, yada, yada, yada. But imagine the president's chosen successor then takes to the media openly jawboning for immediate rate cuts, turning Fed policy into a political street fight. This is the kind of underpriced volatility the market isn't really fully hedged for, and why today's calendar could have aftershocks that will last well into and beyond the July 4th holiday. So the speculation around Trump's picks center on three frontrunners, each telegraphing a slightly different flavor on the White House-friendly monetary policy. There's Kevin Warsh. He's often mentioned for his pro-business bona fides and his long-standing ties to Wall Street, both GOP donors and Wall Street. Warsh has publicly criticized the Fed for being too slow to cut rates, and his appointment would signal a clear break with Powell's higher for longer stance. Then there's Scott Bessent. He's the current Treasury Secretary and a veteran of Soros Fund Management. He's an insider favorite. He's already proven his loyalty by shepherding the administration's fiscal agenda and is widely seen as a team player who would align monetary and fiscal policy for maximum political effect. And then there's Christopher Waller, the only candidate currently at the Fed. Waller's recent speeches have shown a growing willingness to entertain rapid rate cuts, and his nomination would be the least disruptive in procedural terms, but the most direct rebuke to Powell from within the central bank itself. Now, each name floated brings its own signaling effect, but the common denominator is unmistakable. Trump wants a Fed chair who will pivot to easier money, and the market knows it. As soon as a successor is named, expect that person to hit the media, jawboning for cuts and setting the tone for a new politically charged era at the Fed. In other words, Trump wants to preempt Powell by taking his voice away. I don't know how successful that will be, but they'll go on some sort of media blitz, bring out whoever the nominee is going to be, and then just have that person hit the media waves and just try to totally dominate. Like I said, very Trumpian thing to do. So anyways, that's what's going on. Powell today at 9:30. Then I would imagine there's going to be some follow-up to that from the Trump administration. You'll start seeing, in my view, this is what you'll start seeing. You'll start seeing talks about who the successor will be. Then finally that successor will come on. Everyone is kind of asleep at the wheel also on the tariff thing because it is July 1st. Tariffs are set to expire on July 9th. That would bring it to next Thursday, right? So we're going to be on this long holiday, and then it's going to be building up to that tariff pause. What would we call the end to a pause, right? That was the 90-day pause. So why don't we get on to what we're here for, and that is to figure out what our trades are going to be for today. First, we'll start with 0DTE, then we'll take a look at other tail risk trades that would be appropriate for today's environment. And so the first thing we'll do is go to the charts. All right, here we are. So the VIX is pretty steady at where it was yesterday, hovering just above the zombie land regime, which is at 17 and a little bit of change. That means our single out-of-the-money butterflies, which are, by the way, a tail risk trade or a fat tail trade, should be somewhere. I'm going to be changing this soon. The width guidance to one strike higher, so it'll be really 20 to 30. So we're looking 20 to 30 wide. When we look at the big ass fly for a little bit more guidance on this, you can see the big ass fly sitting at around just under 27. Still a little bit too high for us to take as a trade. Oh, I see. Markets look like they have advanced a little bit, or actually dropped just a little bit. And so I would say that the debit is still around 27 and change. So this morning I had it offset. It was centered there this morning, but it's not there now. All right. Let's go back to the charts. Take a look at the market direction. We're still bullish bias, maybe slightly less like that, right? But we're still bullish. Markets have dipped just a little bit this morning. We're expecting big economic reports just in a few minutes, so we might get that live. That is, if I can't shut up and go another 6 minutes into this broadcast and we all see it happen simultaneously. But anyways, look at that. We got a bit of a drop. I'm not sure exactly what that's. Did someone get a preview on the economic reports today? That's kind of weird. There's not much to go on in terms of volume profile, looking for a area of support. This is all really thin volume because we're at right near all-time highs. As a matter of fact, yesterday we did create another all-time high. Overnight, we've been going down ever since, and right now, right before the market and the economic reports are coming out, we're experiencing some sort of malaise. All right, it's not a big drop. I mean, we're only talking about 10 points or so, but it's still right before those market reports, leading me to believe that there has been some kind of leak. But we will find at least some resistance or support here at these volume levels, even though they're relatively new and they haven't had a chance to do a lot of retracement. So, but I think you'll still find them having some impact. But I would think that we will see some support right there. We'll see. Whatever this was, whatever came out, maybe that it's a little stronger than I think, right? But that's very unusual. So something's come out. Something's up. Something's up right there. Let's take a look at what the market reports are. Let's see. That's not it. That's not it. Oh, wait, sorry. I should just go right to the source. I took a screenshot of it this morning, and I'm wondering where the hell did it go? Ah, here it is. And preview. There we go. So all the reports are after the market opens. So, and they're all pretty impactful. Of course, Chairman Powell at 9:30. So I'm not sure exactly what's going on here pre-market, why the market has dropped all of a sudden. But we have ISM manufacturing PMI, which is pretty big, and JOLTS. And then, of course, JOLTS will be setting up. JOLTS job opening sets up for ADP, and then the employment situation report on Thursday. And Thursday, by the way, will be a shortened day. Markets will close at around 1 p.m. Eastern time. And then, of course, the long holiday. So it's like an extra long holiday. You get to go home early so you can get prepared and start the cookout and for fireworks. Typically, most people do fireworks on July 3rd, right? In observance of July 4th. All right. So there we go. Let's get back to the big head. That's about all I've got to say. So there are no reports at 8:30. I was just speaking out my butt. Thank you very much. This is the, well, let's see. What we haven't done is taken a look at what our actual situation is. So let's do that. And look at what kind of reports that we should expect. Oh, so you brought it right on here. So based on what's going on today, so intraday BAF, I don't think so. We'll be looking at 25 to 35 out of the money butterflies. Gamma harvest, though, this is a 1 to 2 day DTE. You know, you notice that this is only for the next couple of days, but I wouldn't recommend it. VIX stable fade. You know, there's not a hot. You know, these might be cheap, so you might be able to go a day out for tomorrow, or even Thursday morning. But I'm not going to have any trades on for Thursday. Probably just stop things a little bit early and get going onto the long holiday. But a 1 to 2 DTE, that would be bring us out to Wednesday, say. VIX is stable, both fade both tails, holiday drift, premium sell. So what we're saying here is that maybe a 30-40 wide fly below the market. I mean, probably would have been a good idea to do that before we got this move that is persistent right now. And see if we can capture a little bit of lightning in the bottle before the holiday. Everything else is much further out, right? So these are kind of low level things here. Tariff hail tail hedge. So we'll take a look at that as well today. All right. So what we're saying there is that small out of the money puts and calls with expiration beyond the tariff pause end, right? Hedge the post-holiday volatility. So what we're looking for is putting either both put and call, kind of like a strangle. Put it way out of the money. Find that convexity point where price really drops, and 5 to 10 days out. So just in case, put it on cheap. Maybe spend $40-50 and see what happens. All right. Now I'm done. All right. Thank you all very much. It's going to be a slow week. By the way, July. Did you know that July is one of the strongest months as far as market performance goes in the course of a year, and then August and September are like the worst months. They're actually on average over the past 30-40 years negative. So that's going to be kind of interesting. Interesting to see what will happen for the rest of the month. All right, that's all I've got to say. Thank you very much for joining me today. Coach Ernie is out.